Hello everyone. In this video class, let's solve a problem on ratio analysis. Unit 3. Chapter name is ratio analysis. I am Madhu Chetan N. From the following balance sheet of Santosh Limited for the year ended 31st 12 2012, you are required to calculate debt equity ratio, return on capital, return on equity, proprietary ratio, and assets to net worth ratio. So the balance sheet as on 31st 12 2012 is given. The liability side, equity share capital 6 lakh, general reserve 3 lakh 50,000, dividend equalization fund 50,000, debentures 1 lakh 60,000, long term debt 40,000, creditors 2 lakh, bills payable 10,000, provision for tax 50,000, profit and loss account 2 lakh 10,000. The asset side consists building 4 lakh, machinery 2 lakh, furniture 2 lakh 75,000, long term investment 2 lakh 50,000, stock 3 lakh, bills receivables 1 lakh 35,000, bank 1 lakh 20,000, preliminary expenses 80,000. The total 17 lakh 60,000. Now moving to solution. The balance sheet has been rearranged like this. First, we can take current assets. Current assets, let's see the current assets here in this problem: stock, bills receivables, and bank. Similarly, the stock 3 lakh, bills receivables 1 lakh 35,000, bank 1 lakh 20,000 is taken. Total current assets are 5 lakh 35,000. Then we can take the fixed assets. Let's see what all the fixed assets are given in the problem: building, machinery, furniture. These three are the fixed assets: building, machinery, furniture. And investments 2 lakh 50,000 is also taken under fixed assets. So total, how much the total fixed assets are? 11 lakh 25,000. Then here the one thing, the preliminary expenses are left, they come under building fixed assets, machinery fixed assets, furniture fixed assets, long term investments are also taken under fixed assets, stock current assets, bills receivable current assets, bank current assets. The preliminary expenses are considered as fictitious assets. They come under the heading of fictitious assets. So here it is taken the preliminary expenses 80,000. So total assets 17 lakh 60,000. Let's check the total of assets in asset side is also 17 lakh 60,000. Now coming to current liabilities. The current liabilities are creditors and bills payable, that they are taken here. Moving to next further, and also the provision for tax. Total current liabilities are 3,50,000. So total current liabilities in the problem are 3,50,000. Now next heading is long-term liabilities, long-term loans and liabilities. So long-term loans and liabilities, under that let's see the items which will come. First one, long-term debt and debentures. Dividend equalization fund comes under the capital and reserve fund. Reserves item. Equity share capital, capital and reserve. General reserve, capital and reserve. Dividend equalization fund, capital and reserve. Debentures, long-term loans and liabilities. Long-term debt, long-term loans and liabilities. Creditors, current liability. Bills payable, current liability. Provision for tax, current liability. P&L account, capital and reserve category ನಲ್ಲಿ ಬರುತ್ತೆ. Now let's see. So long-term debts and debentures are to taken. Total long-term liabilities are 2 lakh. Then capital and reserve. Under this category, equity shares, general reserve, dividend equalization fund and P&L account will come. So total capital and reserves are 12 lakh 10,000. Then the total liabilities are 17 lakh 60,000. The balance sheet liability total also 17 lakh 60,000. The given problem, the balance sheet total and the after rearrangement, the total of total assets and total liability should be same. If it is not same, then we have to check whether there is any missing figures, whether we have left out something like that. Now let's calculate some ratios, the ratios which we have been asked to calculate. Now the first ratio is debt equity ratio. The debt equity ratio formula is debt divided by equity, or long term debt divided by shareholders fund. So what are all the long term debts? Long term debt in the given problem. So long term debt is, total long term debt is 2 lakh. So that 2 lakh is taken. And shareholders fund. The shareholders fund comprises the capital and reserve item 6 lakh. Equity shares, general reserve, P&L account and dividend equalization fund. These 4 comes for shareholders fund. With that we have to, the total will be 12 lakh 10,000. From that we have to deduct the preliminary expenses, that is 80,000. If we deduct, we will get 11 lakh 30,000, that is shareholders fund. So the ratio will be 0.16:1. So how to calculate this ratio? These two, the 2 lakh divided by 11 lakh 30,000 has to be divided by single number. So it is divided by 113 here, 113. So 0.16:1 is the debt equity ratio. Next, moving to return on capital employed. Formula: net profit before interest and tax, or earnings before interest and tax, EBIT, divided by capital employed. What is capital employed? The shareholders fund is itself is a capital employed. Debt, long term debt and equities. Capital and reserve item comes under shareholders fund, and it can also be taken as the capital employed. So net profit before interest and tax 2,10,000. 50,000. Let's see where this amount come. This amount 2,10,000. See the balance sheet given problem. 2,10,000 and 50,000. Before tax means we have to add the tax which is already paid in that P&L account. 2,10,000. This 50,000. It is assumed that 50,000 is paid, but to calculate the return on capital, we have taken EBIT, earnings before interest and tax, means before the profit before deducting the tax. That's why we are adding here. So 2,10,000 profit and loss account, 50,000 is the provision for tax. This 11 lakh, 13 lakh, 30,000. It's 11 lakh 30,000. That 11 lakh 30,000 comes from that capital employed. So the percentage will be 19.5%. The 19.5% return on capital employed. Next, return on equity. So equity fund here we have to take. Net profit before, net profit after tax and equity fund. So net profit after tax is 2,10,000 and equity capital is 1 lakh. So here we have taken 21% of the tax. Sorry, 21%. Return on equity is 21%. Then proprietary ratio, shareholders fund divided by total assets. Total assets, the asset side total 17,60,000 and shareholders fund 11,30,000. The ratio will be proprietary ratio 0.68. 0.68 is to 1 if we have to write it in a proportionate form. Next, fixed assets to turnover ratio. The total fixed assets are 11,25,000 and the net worth is shareholders fund 11,30,000. So answer will be 0.995. This is the end of the problem. The 5 ratios were asked. The first ratio is debt equity ratio, that is 0.16:1. Second ratio is 19.5%. Third ratio is 21%. Fourth ratio is proprietary ratio, that is 0.68. Fifth ratio is fixed assets to turnover ratio, that is 0.995. So with this I end this video. Thank you very much.